The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 14th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And, of course, one of the best ways to do that is to remember that fortune knocks at the doors of those who are prepared. In fact, it was Henry Ford. He once said, hey, nobody can really guarantee the future, but what we can do is size up the chances, calculate the risks, estimate our abilities to deal with those risks, and then, Stevie added, take massive action. So take massive action right now. Go ahead, pick up that phone. Give me a call at 877-927-6648 or internationally 727-445-1044. Remember, if you've got a question and someone else has that same question, so don't call in for yourself. Don't call in for me. Call in for somebody else. Random acts of kindness. That's what it's all about. It is terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow that's trading up 40 points, S&P up 6, Composite up 15, Russell 2000 staging a big move out here this morning, up about 12 points. And speaking of callers, let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How you doing this morning?
Yes, very good, Steve. How are you doing?
Excellent. Thanks so much for asking. Okay. Tell me what you're doing and how I can assist you here.
I'm not doing anything. I'm just wondering where you think the S&P is headed. Do you think we're going to dump it again today?
You know, I wish I knew for sure with any kind of certainty.
Of course.
You know, I would love to tell you. I would love to tell you that we are. I think that so from you're looking at short-term trades out here, right?
That's right. Right now, yeah.
Yeah, you know, the best, from a short-term basis, the best I can do, I mean, don't get to real short-term here. If we just look at what the S&P has done so far, if we just take a look at the S-Mini so far this morning, and this probably helps to answer your question, because what we have so far, this is the 5-minute chart that we're looking at, Lou, is the S&P, what it did this morning as it made its most recent high, it made an A to B equals CD pattern. The A point was down here. That came in at about 5:50 a.m. this morning. The B point was at 6:35. C point was a retracement, about a 0.786 retracement. That was down at about 7:30 this morning. Went ahead and made a 1 to 2 A to B equals CD to the upside at the 1883 level. Made that fourth wave up, oftentimes where you can see a reversal. And since then, we've seen about a 0.786 retracement. Let's actually go measure the retracement here of that move. Now, what I want to just point out on this shorter-term basis, the question is, if the ES Mini is going to move higher, we should see what? We should see higher lows. And at this stage, we've got that, higher lows and higher highs out here. And let's just take a look at that retracement just to get an idea as to what may be going on. See if it was just a natural retracement. And I'm looking at just simply the C to D leg. So I'm going from that 7:30 a.m. time frame up to the time period at 9:45. And what we can see is that the market, did a 0.786 retracement, very close to it at 1870.42. Lou, if the 1870.42 isn't breached and we see the level here of about the 1884 get taken out, then maybe what we're seeing here on a daily basis, intraday basis, we're seeing a series of A to B equals CD patterns to the upside. So the question is, what you first posed to me, you know, do I think that the ES Mini will cascade lower? I would say it's a pretty good likelihood that it would if you see the low here of 1864.75 get taken out. If, on the other hand, you see 1884.69 get taken out to the upside, then it's a pretty decent chance that what we're seeing is a small series of A to B equals CD patterns to the upside. And the way that you would play that is you would go ahead and buy the next retracement. 0.618 or 0.786 retracement. So right here, as we speak right now, there's not enough information on this ultra intraday session for me to be able to give any more information than that as to what the market is trying to do. Now, we can take a look at the Russell 2000. Why don't we go take a look at that and see what it is doing? We'll just go look at the IWM as an example. So let's move over and take, because that is the weakest indice out here. So let's go see what it is doing. It's up $1.34 this morning, and so it's actually the strongest of the four. Now, what the IWM did yesterday, we took a look at it on the futures contract in the first hour. It completed a 1 to 1.2728 to be equal CD to the downside. That price projection on it, Lou, was at 103.67. It got down to 103.86 out there. And as we speak right now, you've got a bullish reversal signal. But we're, a lot of time left in the trading session. But I really do believe that from weakness, we do find strength out here. So I would be paying attention to the IWM and the XLE, right? The XLE has been super weak out here. And if those two start to reverse a bit, then what it tells you is, okay, we've got at least at a minimum a counter trend rally. Whether it's a bottom or not, we won't really know till we see how price moves off of that. And if I move over to the XLE at this stage of the game, it's still weak. It has extended its losses out here. So we're not seeing any strength inside of the XLE, which is, I think, the seventh weighted structure inside of the S&P 500. So, when you're taking a look at, hey, what's going on inside the S&P, the XLE is kind of a smaller component these days out here versus something like the XLK. So let me just take a look at the XLK for you. Let's go see what that is doing out here. The XLK, not giving us a huge sign of strength or anything along those lines. So I have to say it's better to you when I asked you what are you doing right now and you said you're not doing anything. Sometimes neutral is a pretty good stance.
Yes, I can see that.
But I think what will answer your question, because you're looking for those shorter term trades, is just go to a 5, a 10-minute type chart out there and just pay attention and see if we start to see lower lows and lower highs, and then you can go ahead and buy those retracements for a shorter term trade, especially if it moves down with volume. Those 0.618 or 0.786 retracements out there, and I think that would be the best way for you to go ahead and take a look at trading anything to the upside, and just make sure you've got stops in place. If you use this 0.618 retracement, have your stop somewhere below the 0.786 retracement. If you use a 0.786, have it below the 1-to-1 area, and that's how you would dip your toe in it. Great. Okay.
Yes, sir.
All righty. You betcha. That was Lou in Nashua, and what's great is taking a look at some of those intraday charts can be very helpful in helping us to identify where price is headed to. Whether if you were with us during the first hour, I lost my data feed somehow, and so it forced me to really figure out how was I going to fill that hour. It was pretty easy, because my newsletter service, I've got the expanded edition is long enough that we could talk about it for 2 hours out there. But what I shared with listeners out there was the mere fact that inside the markets, the press, everybody's making a big deal about the 200-day exponential or simple move. I don't know whether they use exponential or simple. They're just simply making a big deal about the 200-day moving average. I did a study for my clients this morning that took a look at the weekly chart for the S&P 500, and what you'd be amazed at is that the same price destruction, in essence, that we've seen, the same harmonic price pattern. It's the same harmonic price pattern that we saw during the first move off of the highs in 2007, the first two moves off of the highs in 2007. We've seen it 4 additional times off of the lows in March of 2009. We've seen where prices broken below the 200-day exponential moving average. I think the folks in the look, they're not technicians, so I'm not beating them up or what have you. What I do want to do is just want you to recognize that the move that we've seen so far is just simply normal. It's been normal. It's been a normal move. People are talking about, they get too caught up in this 10% correction thing. 10% of something that's at $1,800 is a lot different than 10% at something at $1,500 or $1,600. So you can't get too caught up into these percentages. Instead, just look at the natural harmonics of the moves out there. In any event, let's go out to San Antonio, Texas. We've got Chris, who'd like to take a look at the IWM. Chris, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing good. How you doing?
I'm doing great. You know, you live in a beautiful city out there, an absolute beautiful city. Are you a resident of San Antonio for a long time?
I've been living here about 10 years, and I'll tell you what, it's hotter than hell down here in the summer.
Yes, it does get hot. I said it was beautiful. I didn't say whether it was cool or was. But yeah, now. So 10 years. Where'd you move from to move to a hot environment like that?
I moved from Lubbock, Texas, which is far west Texas, which is much cooler than it is here.
Is it really?
Yeah.
Did business take you out there?
A job did, yeah.
I love that Riverwalk Center down there, just to hang out, have a beer, drink. It's called Riverwalk, isn't it?
It's just downtown. It's what it is.
Yeah. Absolutely. Well, look, you wanted to look at the IWM, and tell me what you're doing and how I can help you.
Well, this thing has been in a consolidation for a long time, and
it has been.
I shorted it quite a bit higher, and once it got to the bottom of the consolidation, I went ahead and sold my position because I was afraid it was going to bounce.
Sure.
But now it's broken out of that consolidation, and going back to my old days with Bud Rolfs.
Yep.
He always said it. Once you break out of the consolidation, you'll go back and test it.
Yes.
And I was planning to short it again once it tests. Goes back and tests the bottom of the consolidation. And I wanted to see what you think about that.
I think you've got two plays out here, and so you're absolutely right. Whenever you break any type of consolidation pattern out here, what you ideally would like to see is you want price to confirm that it really was a break versus a false break. So that 107.15 mark, what did you pick as the consolidation low where you would make that long or short decision?
I don't have my computer
That's okay.
up right now.
Okay. It's in that 107 area, which I'm using here, Chris, as either the swing point low from February 5th. That's 107.27, so you could use that. You could also use the swing point low from May 15th, and that's at 107.44. Or as where the consolidation really began was back in November of 2013, and that was at a low of 107.14. So somewhere right in that 107 area is what you're looking for as a test. And then what you want to see, because it's this is how I would trade it. One of the ways that you could trade it, because it's a nice 13-point consolidation. The consolidation move was from 107 to 120, as that range out there. So that's a nice move inside the IWM. Let it test it and then reverse out of there and then jump on board. And let me ask you this question: if it gets back in the consolidation pattern, what would you do?
Well, I'd consider going long.
Okay.
If it got back in there.
Yeah. So that's really your line of demarcation, and inside the IWM it becomes an easy trade. And with this being such a weak indice out here, and with it being so over sold, for it to bounce and at least get back up there and test that, it should at least be able to do that. Hey, can you hold on for just one quick break here?
Yeah, sure.
Okay. We're going to go back out to San Antonio, Texas, to Chris. We're going to take one other look at the IWM, because the question is, have we already seen a test of that 107 area? This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 32, S&P's up 4, Composites up 10. And it's the Russell 2000 that we're focused on. We're speaking with Chris in San Antonio, Texas. The Russell 2000, for a second day in a row, trying to really flex its muscle. The Russell 2000 up 1 1/10%. And we're going to go back and we're going to take a look at the IWM. So, a couple other pieces of information. I don't know if you noticed this, Chris, but, the consolidation pattern, in essence, inside the Russell 2000, it was broke just slightly back on October 7th. It had 40 million shares to the downside, and we saw it close below that. The very next trading session was when we had that key reversal day. That was last week, Tuesday, Wednesday, I think it was, when everybody attributed the bounce to the Fed out there. So we've already had at least one test of that area. What I would also say, and I just drew on my chart here for the IWM, a descending price channel out here. If this descending price channel fails and price moves below yesterday's low, pretty good chance that it's going to continue lower. We can say, I think you and I can say, hey, that Bud Rolf's test of the consolidation pattern is already actually in place out here. And you could consider actually taking a short trade, knowing that you've got a potential 13-point measured move to the downside, and you'd have to have your stop probably somewhere above the 107-ish type area. Likewise, if price gets above that 107 area, let's just assume that at this stage here, the strength that we're seeing inside the Russell 2000, if there was a significant low that was put in place at some point in time during this during this counter trend move, the Russell 2000 will pick up the pace and will be the leader in the clubhouse. And that's something that we really want to pay attention to. So if it gets above that 107 area, I think also taking a long position in the Russell would make a lot of sense as well. And then it's just at the top of that descending price channel, which is probably in the 111.50 to 112-ish, 113-ish range, is where we really determine whether or not price there would move up all the way to the top of that 120 area. But those are the different things that I'm taking a look at. Is there something else that you're taking a look at too that you can share with the audience and myself that we should take notice of?
No, Steve. Actually, I missed that part where it actually had gone back and already retested the breakout zone. So I didn't know that. So
yeah, it was very slight, but nonetheless, it was a test, and the volume on that trading session was 40 million shares, which was going against 75, which was going against 60, and so. For you to have exited at the stage that you did made all the sense in the world because it was coming up against swing points in that consolidation area, with light volume. But it closed below it, had that nice key reversal session on October the 8th, and that session really should not have failed. It should have held. And then that next session down was 60 million shares. So as consolidations go, that level's been tested. So, I think at this stage, just like when I was talking with Lou and I were taking a look at the S&P, I think neutral is not a bad position at the moment, and let the market prove itself either to the upside or to the downside, and then just go purchase that ticket.
Okay. Well, thanks a lot, Steve. I appreciate it.
You bet. Thanks so much for calling. That was Chris in San Antonio, and that was a look at the Russell 2000, where I do believe, folks, that what we will see is... Well, I got a big echo in my ear, Al. What we will see. Well, I got to take my earplugs out. What we will see, or we should see, is if the market is going to make any kind of significant bottom, it should be the Russell 2000 that will be the springboard. So we really do want to continue to focus on the IWM and watch to see what happens there. Let's take a look at the other ETFs out here. Let's go look at the Qs, the SPYs, and the diamonds, just to round things up. See what we're looking at here. If we take a look at the Qs right now. They're trading sideways. Volume so far. Now, volume yesterday, 80 million shares. The day before, 77 million shares out here. What we know about the Qs is that the Qs have taken out a swing point with volume. The swing point being the August 6th level out here. So it's taken that level out with volume. Now, most people would say that the mere fact that the Qs took out those levels with volume. What happened to the other caller? What other caller? Do we have another caller out there? No, okay. Most folks would say when we take a look at the Qs, that the Qs moving down with the volume, that what we are looking at is confirmation of a move lower in the marketplace. But the reality is that the Qs have got that amazing volume characteristic. And until we really see it change, until I really see it fail, the Qs make bottoms with volume out there. And I don't know if it's hedging. I don't know what it is that causes that. It could be just simply all the buybacks that are in place, and that's what a lot of the financial coffers are doing with all that cash that they've got at those cheap interest rates. In any event, this is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 37, S&P is up 5, Composite up 16. And one of the email questions that came in was, what would it take for me to jump ship and give up the idea that a significant low, significant bottom is being formed out here? And so, one of the holdouts here, I'll go ahead and put it up on the screen. It's the New York Stock Exchange. And the New York Stock Exchange here, the best, widest swath of the market, gives us the best feel for what's going on. And as we take a look at this, as I pull this back, first you can see this larger rising price channel that's been in place. That's not the largest one. This is just the one from 2011. We saw that price broke through that, but that so much is not the of what's of interest to me. What's of interest to me is I took this back as far as I could to take a look at when the McClellan price oscillator is below the zero line. I focused on a number of different time periods, but I really took a look at when the price oscillator breaks below the zero line. That tells you that the summation index has turned down. Pretty good chance that, well, not pretty good chance, it tells you that the sellers are in control of the marketplace. Now, in the case of the NYSE, it broke below that oscillator back on September the 8th out there. So the bears have had control of the market since September the 8th. The bulls gave it their best case scenario, and that was back on October the 8th. So that was, about a week ago, October the 8th, we saw that nice move up. But the move up never broke that zero line. Now, what I've done is I've gone back and I've studied the New York Stock Exchange to see, once the break below zero takes place, have we ever had a time period where we've had a rising price oscillator, where we're making higher lows out here and not seeing the market bounce in a significant way out here. And I have not found a single instance. In fact, typically what we see is we see significant bottoms. Now, we can say that the exception to that is this most recent significant bottom out here in August inside the New York Stock Exchange, right? We had that same rising price oscillator making higher lows out here, and certainly prices moved back below that August level out here. But with regard to my current position of seeing some type of significant bounce that unfolds here, the key will be how I would jump ship is if I see the price oscillator reading move below minus 244. That's the reading that came in on the trading session of September 25th out there. Then I say, okay, maybe anything that we see is nothing more than a counter trend rally. But I can go back as far as I can inside the New York Stock Exchange, and anytime that price oscillator is moved below the zero line, and then we've seen some rising bottoms out here, we've seen significant market bounces. The time before was the one that we had back in June of 2013, and so this actually it's similar to going and taking a look at that price relative strength divergent pattern that we saw inside, for example, inside of the NQ. This morning here, we took a look at the 120-minute time frame chart out here, this 120-minute time frame chart for the NQ. Beautiful thing with regard to all the patterns that it has in place out here, and that is at number one. If we take a look at yesterday's low coming into that 5:15 time frame, price moved lower with less relative weakness. We got a nice bullish reversal signal at 8 p.m. We got follow through at 10 p.m. That was a confirmation of what Stevie calls a price Rhodes momentum indicator signal out here. That was telling you that was an important low. If we use Basil-Chapman system, we can see we had a seventh wave down, potential seventh wave down. When you got to that G, that was it's an easy trade. It says your stop is 1 penny below that low. That low out there, by the way, is 37.92.50 out here. Price bounces. Where does price bounce into? Well, price bounces right back into old support. Old support becomes new resistance. Now, this level here never really was able to be tested as support. Instead, what it's been tested as is resistance. That's our TAS market profile high. Take a look at all the great tools that we have for you for 10 hours a day here at TFNN. If we take a look at that support level, 38.29.80, we can see that price on the 120-minute time frame during the 10 a.m. session between 8 and 10 a.m. Price tried to get above that level. It was rejected. We're going to see another test of that during the, or we should see, I should see another test of that between 10 and noon. If you see price get above 38.29.80, that gives a little bit of oomph to the bulls out there. Getting above 38.48, that would just be a natural level of where price would head back to. If you get above 38.48, it says 38.76 is next on its list. That may be all that the market has inside it, if it can even muster up that kind of energy. If it musters up that kind of energy and gets above 38.76, it tells you a whole different thing is in place here. And that's where you'd also go back and you take a look at the Russell 2000, the IWM, and try to put together those pieces of the puzzle. So the New York Stock Exchange, even as we speak right now, even through yesterday's move lower, careening lower, it still has a rising price oscillator out there. And as I say, if you just simply do the work, you go back, you take a look at it, you will see that in every instance there was not just a little bounce, there was a significant bounce inside of the marketplace. And until I see what that bounce looks like, because when we were speaking with Chris in San Antonio, we've got a little rising price channel. Does price get back up to that rising price channel, which is around the 10,387 level, and reject that area? If that's all that happens on a counter trend rally, then I will jump ship. Why do I say 10,387.17? Because in the case of the New York Stock Exchange, it broke through its, I think it was like an 11-year or 16-year consolidation, 6,200-point consolidation pattern that it broke through. And that consolidation pattern to the upside is at that 10,387.17. We now, since the break of that level, we now have price moving below that area. And so that's got my sphincter muscle a little tight out there. Because at this stage here, I know that what we have seen at this stage of the game, we've seen a false break topside inside of the New York Stock Exchange. So what I do know is we've got two very strong competing patterns out here. If price gets above the 10,387.17, gets back into the rising price channel, price oscillator gets back above the zero line, then the bulls have control. And we can see what the bulls will do with the game. If price just simply bounces, gets back to 10,387, and then starts to head lower again out there, then then the New York Stock Exchange would clearly be suggesting to me that the break topside was just that, and we start taking a look at moves down to other swing points. We'd start looking for information as price got down into the January 2013, February 2014, I'm sorry, not 2013, but 2014 time frame out here. So we'll take things one step at a time, and those are some of the reasons, as well as the reasons when we took a look at the S&P 500 this morning and its normal, natural, harmonic move to the downside that has been present with inside that pattern since 2007. It goes back further, but I just simply went ahead and figured, hey, if I just simply show it to subscribers since 2007, it's the move lower that I'm looking for, has a lot of the move lower, the move higher, the significant bottom that I'm looking for has a lot of merit to it. Just as if it fails, we know what the next harmonic pattern is to the downside, and inside the S&P, that brings us into the February 5th time frame out there. If I take a look at the NASDAQ composite as well, what you're going to see here is as the price has moved lower inside the composite since the time frame here of October the 1st, it's moved lower, yet its price oscillator has just simply moved horizontally when it's identified its lows out here. So the strong NASDAQ composite has even also given us the sign that a reversal should take place. Now, inside the composite, it doesn't take too much for this to actually get above zero and for the bulls to get back in control of price. The composite has been below the price oscillator since September the 12th. It was September the 12th when it actually broke below that level. So those are two areas for us to be paying attention to inside of the NASDAQ composite. As we had mentioned when we took a look at Lou, let's just go back to that 5-minute chart out here. We said, hey, just look on an intraday basis to see if, in fact, the ES Mini can start to form higher lows out here. At this stage, we just simply have nothing more than just a neutral piece of information inside of the market out here for what it is doing at this stage of the game. Let's go take a look at some things that are moving in the marketplace. Let's go take a look and see what some of these gold stocks are doing. We've got gold only up $4.50, but let's go take a look at Rand Gold. We took a look at some of these yesterday. We see that these are absolutely on the move. They are off the bottom floor. They certainly appear to me to be off the bottom floor out here. What Rand Gold was doing yesterday, let me get rid of the A to B equals CD pattern that is out here. We take a look at Rand Gold, nice key reversal session that took place on October the 8th. That was a volume moving topside, 1.5 million shares there. Yesterday you had only 998,000 shares as it tried to get above that level. It could not. However, when you take a look at Rand Gold, what it has done, which it has not done since the time period here of... let's see, when was the last time that we saw price above? Well, it has not done that since, July 11, 2014. I take that back. There was two trading sessions. It has not done it since August 29, 2014. And done it, what I mean by done it, is it has not been able to close above the market profile resistance area. So Rand Gold Resources, it is now trading above that. It's the second time above that. It's trying to use that as now a level of support. Old resistance becoming support. That's at 68.86 out here. And that is on ticker symbol GOLD. If we take a look at Gold Corp, Gold Corp's up 62 cents this morning. This, too, has a very strong-looking pattern out here. Gold Corp, when it had its key reversal session, which was on the day of October October the 8th, priced up right at the top of its market profile high. That's at 24.62. That level is going to come under attack again. Volume yesterday, so-so. 5 million shares versus that 10 million share day and 9 million share day on October 9th and October the 8th out there. Nonetheless, GG, ticker symbol, which is the number one weighted equity, I should say, inside of the GDX, is on the move. If it gets above that, when it gets above that, that ought to make the GDX move as well. Of course, there's other stocks inside the GDX. You've got Barrick Gold up 28 cents this morning. Barrick Gold weaker than the other two that we took a look at. I say weaker because it came back into the bottom of that October the 8th session out here. Barrick Gold still has resistance. It's just trying to get above the old support level at 13.99 out here. So there's your weakness with inside of that. Agnico Eagle, AEM. If we take a look at this equity right now today, you can see it's got a very narrow market profile out here. Once it gets above 31.56, it should be off to the races out here. So this is stronger, most certainly, than Barrick Gold. And a pretty strong. Of the equities out here, AEM is pretty strong out here as we take a look at its move off of the bottom. So the mining stocks are moving to the upside. You got Goldfields, GFI. Let's take a look at that. That's up nickel. K-Rico has been looking at Goldfields. I don't know if he got into it or not, but we had that nice reversal session out here on October the 8th. What it's trying to do right now, it's also trying to get above that 419 level out here. So far, interest session, we've seen a high of 416. A close above 419 would go a long way to become bullish out here. If we go take a look at some other things that are moving, hey, how about this? Moving. Let's take a look at light sweet crude. Talk about this moving. Trading out at $84. Where is this headed to? Let's go take a look at longer-term chart patterns out here. Let's go take a look at a monthly chart for light sweet crude. Let's go see what we can find out here. Yeah, there we go. We got these nice big bars out here. Oh, let's go switch over to the continuous contract, though. That'll make it a whole lot easier for us to look at. CL # F equals uno. Okay, now we've got the monthly chart out here. And what you're going to see, what's interesting here about light sweet crude, really it's just been trading in a consolidation pattern out here. The bottom of the consolidation, really at this stage of the game, we're going to say is $75.71, and the top of the consolidation, pretty easy, 113. So you got a nice, 25, 35, 38 point or so consolidation pattern inside of light sweet crude. Now there's a hammer candle on a monthly basis. Hey, I didn't say to do that. Let's take a look at this. So price right now is trading into the hammer candle. That hammer candle was from June 1st of 2012. That says there should be pretty good support at the low of that hammer candle, which happens to be, in essence, very close to the bottom of that consolidation range. That price is $77.28 out there. I don't really have the volume that's going to, well, I guess I do. Maybe the volume is correct on the continuous contract. It says 6.4 million shares the month of June, the first out here. So far this month here, it looks like we've done a total of only 3.5. We are, at October the 14th? Well, we're halfway through the month. So you've got volume that is similar to that swing point low from June 1st, 2012. If you break below 82.81, you'd have to say the 75.71 level is in place. And looks like the world of hurt that the countries have gotten together to just try to go ahead and squeeze Mr. Putin. His sphincter muscle should be getting a little bit tight as we speak. But not, when you just take a look at forget about the news, you forget about everything else. Light sweet crude is doing nothing more than trading in a very long-term consolidation pattern out there. Let's go take a look at Chipotle CMG. That's up about 1% this morning, up about $5. Hey, it's a monthly chart that we're looking at in Chipotle. Nothing wrong with its monthly chart as we speak. A little tired with that little doji-style candle for the month of August, but otherwise looks pretty good from a monthly standpoint. This is Steve Rhodes. This is TFNN. Dow's up 76, S&P up 10. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. This is Steve Rhodes with TFNN. I have lost my connection altogether. Talk about challenges this morning, but look, we've got it covered. So coming to you live through my cell phone, you should have a little bit different sound. Nonetheless, we can wrap up this next 4 minutes out here. Although I am flying a bit blind out there, but I know I've got all you Tigers, even though I can't see you. I've totally lost connection out here. Look, here's what we're taking a look at. We've had the Dow, I think, is up about 100 points or so, right in that range. Watch the Russell 2000. Because from weakness, it truly is where we want to be able to understand what kind of strength is out there. And inside the Russell 2000, if that starts to lead the charge over the course of the next several days out here, that is the sign of a bullish market. That's a sign of significant bottom. Now, the last 3 days in a row, we have seen that volatility index just simply skyrocket. But what's most important when I take a look at the volatility index is the mere fact the last 3 days, what we have seen is we have seen a one-day rate of change in excess of 10%. Now, the volatility index, the data goes back to 1995. Is that when it first came out? I can switch over and find my spreadsheet here. Let me see if I can find that. But here's what I can tell you. So when it first began trading was January 3rd, 1995. I go back and I take a look at data. I ignore whatever is out in the media. Now, if I hear a good idea, I always go back and like to test it out and see if it works, see if it's something that is viable, something that we should be paying attention to out there. And when it comes to the VIX index, there's a couple different things that I like to look at. Is it above or below the 50-day exponential moving average? And then I like to look at is one-day rate of changes either above or below minus 10% out here. Well, since the VIX began trading, never in its history, and this includes the two coming off of the 2007 high. So this is a statistic here. It probably you'll be, really? Is that truly possible? Because remember how much volatility we had back then? We have never had 3 days in a row where the VIX had one-day rate of changes in excess of 10%. We only had 11 with this past weekend here being number 12. I believe it's 11 or 12, where we saw 2 days with a VIX index of greater than 10%. Now, what's the importance of that? Look, when there is just a one-day rate of change in excess of 10% out there, 70% of the time, if you go back to when the VIX began trading, you have at least a bounce that takes place. And we haven't seen that. So we've got 3 days in a row out here, and I don't really know what to make from the reading of that because I am in uncharted territory because there's just nothing statistically, nothing probability-wise that we can go back and we can take a look at. So instead, we'll just fall back on those patterns. We'll fall back on the NASDAQ pattern, completing a Stevie pattern out there, price Rhodes momentum indicator pattern. We'll fall back on it being a seventh wave to the downside, and then we'll just pay attention to those resistance levels inside the TAS market profile. Those will be our guide as to what is going on inside the marketplace. We will not ignore the New York Stock Exchange, which has been making higher lows in its price oscillator, and you can go back all the way through history, and when that happens below zero, you see significant bounces in the marketplace, not just little counter-trend rallies out here. So we'll see if that pattern continues as well. Of course, I'm open to anything new at any point in time when those things take place. So, folks, it is terrific Tuesday. Sorry for a couple of the slight problems, but it was pretty much been smooth sailing out there. Pay attention or stay tuned because our man Basil Chapman is up next, and I'll see you bright and early tomorrow morning. Have a great Tuesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.